A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a dramatic shift that has sent ripples through global markets, U.S. President Donald Trump announced a 90-day pause on tariffs for most major trading partners, while simultaneously escalating duties on Chinese imports to a staggering 125%. This decision comes amid rising market panic and economic uncertainty, suggesting a complex interplay of strategy and desperation in the ongoing trade war with China. The announcement, made on Wednesday, has been met with both relief and skepticism from various quarters. The president cited outreach from over 75 countries seeking trade negotiations as a key reason for this partial pullback, which includes a temporary reduction of the baseline tariff to 10%, still significantly higher than previous levels. The markets responded positively to the news, with the S&P 500 surging nearly 7%, indicating investor optimism about potential easing of trade tensions. However, the details surrounding Trump's plan for non-China trade partners remain vague, leaving many analysts questioning the long-term implications of this strategy. Treasury Secretary Scott Bessent noted that countries such as Japan, South Korea, and India are eager to engage in negotiations, but critics argue that this move is more of a reaction to deepening recession fears and a tumultuous bond market rather than a proactive strategy. The broader economic impact of Trump's evolving tariff strategy is still uncertain, with China being home to a significant number of Amazon sellers. Over 100,000 businesses in Shenzhen alone generating annual revenues of $35.3 billion. Any disruption in trade could have far-reaching consequences. The cross-border e-commerce sector, which was valued at 2.63 trillion yuan, $358 billion, last year, could face significant challenges. Wang Xian, head of the Shenzhen Cross-Border E-Commerce Association, expressed concerns that the new tariffs would severely impact profitability, stating, "This isn't just a tax issue. It's that the entire cost structure gets entirely overwhelmed. It'll be very hard for anyone to survive in the U.S. market." As Chinese companies brace for price hikes or potential withdrawal from the U.S. market, the implications for American consumers and businesses are profound. Meanwhile, India has expressed interest in swiftly negotiating a trade deal with the United States following the tariff pause, particularly benefiting its shrimp exporters. This sentiment was echoed by government officials who view the 90-day pause as a relief. In the energy sector, Brent crude oil prices fell below $65 a barrel, reflecting the ongoing market turmoil exacerbated by the tariff situation. Trump's decision to halt higher tariffs against dozens of nations, while ramping up pressure on China, has sparked discussions about the potential for a global recession. Billionaire investor Bill Ackman remarked that China is becoming increasingly isolated, with other U.S. trading partners eager to negotiate favorable deals. The Asian stock markets reacted positively to Trump's announcement, with significant surges observed across the board. China's leaders are reportedly meeting to discuss additional stimulus measures as the country grapples with the economic fallout of the tariffs, which have threatened exports and contributed to a concerning trend of price declines. The Global Trade Research Initiative, GTRI, has cautioned India against pursuing a comprehensive free trade agreement, FTA, with the U.S., suggesting a limited zero-to-zero tariff deal instead. This comes as the potential for deflation looms large, with economic indicators suggesting a weakening of price pressures. ING's chief economist for Greater China, Lin Song, noted that the persistent deflation could prompt the People's Bank of China to resume monetary policy easing. The Philippines has also reached out to the U.S. Trade Representative to explore potential trade negotiations, hoping to capitalize on the pause in tariffs. In Taiwan, President Lai Ching-te has expressed a willingness to eliminate duties on U.S. products if Washington reciprocates, further highlighting the shifting dynamics in U.S.-China relations. The uncertainty surrounding Trump's tariffs has raised concerns among Taiwanese officials, with the central bank governor emphasizing the negative impact of a trade war on the global economy. As markets continue to react to Trump's tariff pause, the implications for U.S. consumers, businesses, and international relations remain to be seen. The temporary reprieve may provide a window for negotiations, but the underlying tensions and economic challenges persist, leaving many to wonder whether this is a strategic move or a sign of deeper economic woes. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.